Welcome to Richard Suttmeier's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. Today I review the mix among the U.S. capital markets as the U.S. economy slips into recession. My first blip shows that the yield on the 30-year bond is stuck in the trading range with no end in sight for the bond conundrum. The daily chart for the 30-year bond is between the 200-day simple moving average at 4.67 and my monthly resistance at 4.11. The low bond yield has helped equity valuations, but longer term, I expect the yield on the 30-year bond to rise as the FOMC has ignored building inflationary expectations. My second blip looks at the rebound in COMEX gold and the new all-time high for NYMEX crude oil. COMEX gold held my quarterly support at 879.5 on April 1st and is now on the cusp of the 50-day simple moving average at 940.5. Daily and quarterly supports are 903.6 and 879.5, with weekly and monthly resistances at 958.3 and 1020.9. Gold has moved back up as the dollar has moved back down, and there remains speculative buying interest in anticipation of yet lower yields by the Federal Reserve. NYMEX crude oil set a new all-time high of 112.21 on Wednesday. Daily and monthly pivots are 107.46 and 108.60, with weekly resistance at 115.26. The chart shows a potential double top or a new round of speculation caused by the FOMC decision to push rates below 3%. That was the trigger back in 2001 for commodity speculation. Will they ever learn? My third blip looks at the dollar versus Japanese yen, euro, and British pound. The dollar versus Japanese yen stayed below its 50-day simple moving average at 103.61. Monthly and weekly supports are 98.86 and 97.76, with daily, semi-annual, and quarterly resistances at 104.42, 105.86, and 108.51. The euro shows a potential breakout or triple top. Daily support is 1.5649, with quarterly, monthly, and weekly resistances at 1.5877, 1.5916, and 1.6241. The British pound appears stuck between my annual support at 1.9217 and monthly and semi-annual pivots at 1.9974 and 2.0029, with weekly resistance at 2.0330. My fourth blip looks at the non-confirmation of Dow Theory and setting the range for the NASDAQ. Under Dow Theory, the March 24th close for the transports above the February closing high of 48.2468 shifted Dow Theory to neutral from negative. The Dow Industrials needed to close above the February closing high of 12,743.19 to shift Dow Theory to bullish. This didn't happen, and this week's support is 12,404. The Dow Transports failed above 5,000 as I expected, and is just above its 50-day simple moving average at 47.80. If the Dow Transports close below the January closing low of 4140.29, stocks return to Dow Theory sell signal. If the NASDAQ closes below its 50-day simple moving average at 2305, a new 2008 high seems unlikely. Join me for Traders Club at Right Side Live this evening at 6 p.m. Send your comments and questions to support at rightsideadvisors.com. That's today's 4 in 4. Enjoy your day.